for our Sunday market update. It's great to have your company, and my name's Paul Botchell. I'll be joined by the team from Actions to Wealth in the next few minutes as we start and get into this market and have a bit of a look at what may come up in the next week or so for us. If you're on Facebook, if you're on YouTube and you have any questions, feel free to put them in the questions box and let us know. If you are on Twitter, we can't take questions from there, but you can go to Facebook or YouTube and get the questions in live while we're here. Should be a good event today. We're going to have 10 minutes early on from Julian on macro markets. Ash will be in talking data to us. Ainslie on gold, then we'll have Shukri on crypto, Ainslie on oil, and then Geoff doing the TA session to wind us up. A few different faces coming in as I speak right now, so good to see you all. Julian, the macro market conditions out there at the moment getting clearer or getting a bit more difficult to understand?
Look, for me, I'm seeing things in a slightly more clearer way, Paul. I think we've got past the holiday hubris of July and August, and we're coming into a slightly different environment. So it appears. So for those of you that followed my macro theme last week, I was talking about the Citibank Global Surprise Index and the American Surprise Index and what that's doing. We know that the economists are being beat down pat by the economy at the moment. It's going in the opposite direction to the way the economists want it to go. And you also know, for those of you that follow that show, that I've been banging on about inflation and how it's slowing down. So what we saw was inflation come out. I think the headline number was about the same, or it might have even been slightly higher. Do you know what? I don't care. What I looked at was the rate of change, and I saw the rate of change falling yet again. I believe 0.1 or 0.2 for the CPI on month, which for me is very significant because, you multiply 0.1 by 12, you get to 1.2. You multiply 0.2 by 12, you get to 2.4. So the way all these percentages work means that as soon as you get some of that old data out of the market, out of the economic numbers, then the inflation rate will fall back pretty quickly. So this is my question, as I keep saying over and over again. If you look at the 30-year bond yield, okay, if you look at the 30-year bond yield, what is going on there, right? At the moment, right, we are seeing the 30-year bond yield still hovering. It hasn't moved. It's still sitting at around about 2%. Okay, so what do they know in the US markets? What do they know at 2% that the inflation market doesn't? And the bond market, as you always know, I have a massive amount of respect for it. So maybe they're saying that inflation is transitory. That's what the bond market believes at the moment. We'll wait and see, because as always, we have to. And Friday was such an interesting day because in fact, everything fell, right? For those of you who were looking around the markets, what actually went up? Well, just the dollar went up, right? For those of you following me in my broadcast group, that dollar Sing position did quite well on Friday. And also we'd be making money out of that short stock position as well too. So at the moment, how I'm thinking as we walk into surprise September, let's call it, we're now sitting in a slightly different thing where, funnily enough, the market seems to be catching up with possibly the slowdown that's out there in the economy. Now, that may be caused by all of the supply chain issues. It may be caused by a lack of buyers. It may be caused by the increase in the number of COVID cases and people are still running scared. Who knows? But I suspect it's a combination of those things. Also, the government's removing some of their support, right? So in the US at least. So you can already see the ingredients that you have lining up for a potential, and I'll say this very carefully, potential correction in the stock markets. It's been 2 weeks down. I don't recall we've actually had really 2 weeks down for quite some time. I know there's been a couple of up days in that, but 2 Fridays where it's closed on the low of the week is quite unusual. So what am I saying here? I'm saying here, beware of convexity. Beware of this being the final grain of sand that creates the avalanche, okay? So what does that mean? That means that if the market was to quickly move, which that probability is growing, quickly move in 2 or 3 short days, we could see a 10% minimum correction in the market from this point, right? So almost like a waterfall. It just starts and then snowballs, not like a waterfall, like a snowball effect, right? And so this is how I tend to view it. I always describe the world as being a pile of sand, and it just takes one last grain of sand to start to create the avalanche on one side of the pile. And I think we may be getting close to that point. However, we might not be, right? So we've got to be careful, and we trade the price action as we see it. Now, the price action we're seeing at the moment isn't very good in the US equity markets. And when you look at that combined with what's happening in gold, so down, combined with what's happening in the dollar, so up, that is the sort of market where you have what I call the correlation of one on risk assets. We are in a risk off mode as we have been for the last week. Now, risk off, that's something and a word we haven't heard for a very, is it one? 2 words. We haven't heard for a really, really long period of time, right? Do you remember the days of risk on and risk off that everybody used to use? When did we stop using those? Well, that was probably when the stock market bounced last year in March, right? So from that point, right, that concept hasn't been used anymore, but I'm going to bring it back. I want to be the first to bring it back. Let's keep a lookout for it when Jim Cramer's next on CNBC. I'll text him tonight, right? And we got to say, hey, look, risk off is now a potential possibility again, right? So what does that mean? That means the dollar goes up. That means stock struggle. So you can see how this is going to work. So if you believe that the convexity is here, and if you believe that we are in the situation where we may see some declines in some of those key asset markets, then if that is the case, the US dollar will most likely rally, so trade accordingly. As always, with all of this, I have the caveat that we have to have the price action to support us. This is the key thing, guys. We can't do anything without the price action. So if the price action supports it, we go with. Now, when we look at the way the price action has been in the US stock market, so let's see if I can just share the screen here and show you guys a couple of things. Let's have a quick wander around, shall we? Okay, I'll leave oil for Ainslie, here's the US stock market. There's the weekly. So how many weeks have we been down twice and closed down those 2 weeks? Well, there was one case back in May, right? That was the last time we had 2 negative weeks. But if you look at that, there was 2 tails together. When did we have 2 weeks where it just went straight down? The last time was back in February. The time before then, we had to go all the way back to October. Right, so this year, if you do a 12-month from where we are now, sorry guys, try hitting the sharing button, that would help, wouldn't it? Thank you for that. Hopefully you guys can see it, can see the share, I hope. Let me just stop it and start it again, because I'll make sure. Here we go. You don't want to see me, you want to see the chart. Hopefully you guys can see the chart, and thank you for the thank you, Dominic. So here's the US stock market, two weeks down, closing on the lows both times, right? So we saw this back here in September and a little bit in October before we began a big rally. Where else have we had it? We had it once in February. So from here, that's what, 7 months ago was the last time we had 2 weeks trading poorly. This I don't count because we had such big tails. So it closed, but it closed well in the middle of the range. So it doesn't, in my mind, doesn't count. And we have not done anything to any of the major support. Where's the first, like intermediate support even, is down there at 43.70. You then got it down at 42.30. And this is what I'm worried about with the convexity of everything. So if we were correcting aggressively, 3,600 is just this year. Okay, and it's been quite a long bull run. So we could see 10, 20% off stocks without even touching the sides. What I'm worried about is the speed that happens. We're living in a digital world these days. Things seem to happen faster. Keep a lookout, guys. Trade the price action. When you look at the daily chart on this, I don't know if anybody's going to cover stocks, but when you look at the daily chart, you can see here that we've gone 1, 2, 3, 4, 5, 6. Well, that was a slight up day, I guess, but it was still a down day against the open. So all the red bars that we've got, we've only had one real positive day. Okay, the rest of them have all been a bit crappy. Okay, so this is the definition of a downtrend, right? So when's it going to end? Don't know. Who knows, right? What do we think is, in order for it to end, I think you've got to find a buyer. Where are the buyers going to be now? Well, they're going to be down here, and they're probably going to be down here somewhere. right? So this is your first set of buyers down here at 43.80 area, right? Where are we now? We're still 44.30. We've still got another 50 points to go on the S&P, which according to this looks to be about another 1 or 2 days move if we are going to go down. I think we hit it faster than that, and I think we'll go through it, but who knows? We'll trade it as we see it. So guys, just remember, right? Seasonally, September isn't the best time of year for stocks. And on top of that, we've got negative price action. So then, as a result of that, and maybe some of the other guys will talk about this, we'll see the US dollar has had, on the other hand, has had 2 cracking days, right? So it has broken out of its trading range. When you look at the weekly chart of the US dollar, that traded okay. Where's your risk? Your risk is if it takes out last week's low. So again, here's your theory, right? Trade the price action as you see it. You see a retracement and you believe in this, then you've got your targets, you've got your risk factors. You can take positions. Okay. If you're whatever happens, if you lose a little bit of money, then it doesn't really matter too much because you've got that risk well controlled. So here's the key thing for the next few days. Think risk control as being your primary consideration. Okay, risk control, that's what we're talking about here. If this market does start to go and strange things start to happen, which often takes place in September, what you need to do is to make sure you got your risk in place. I'm sure Ainslie will talk about what's been going on in gold around that. And also, well, maybe or not so, because oil's been going in the opposite direction. But there's a few things that in my mind are worrying me. If you want to see a crazy market, I'll put a crazy market up here. And by the way, guys, I'm not going to use the let me put up the hold on. Let me put up the Chinese one. I'm not going to use the cryptocurrencies now. Okay, look at this crazy move here, right? For those of you that don't know what this market is, you're going, well, that looks really crazy. This is the iron ore market. Okay, a normal commodity, not a digital currency. You see that high, 220. You see that low, 120. Right? How long did that take to happen? Well, 6 weeks. 6 weeks it took to halve. Okay, that's quite interesting, right? So just bear this in mind that some of these asset markets are a little bit expensive and we could see things like that happening elsewhere. So that's why risk control is really important. So for those of you that saw my macro view last week, remember this thing, right? Inflation. Inflation is still transitory in my mind. I might be the only person in the world still saying that. It looks like government spending stabilizing or coming down, and it looks like the pandemic is stabilizing or getting worse. It certainly doesn't appear to be getting better pretty much anywhere you go in the world. So with all of the issues that we have, is it a surprise that the economists are under struggle and employment numbers are coming out on the downside? Key thing for me, right? The next big massive number for me is going to be the payroll numbers for next month or for this month when they come up in October. So that's what, in a couple of weeks' time, they are going to be critical numbers. If they're crappy as well, I really don't want to think what will happen to this US market. I think it might finally break when people figure out it's not as good as they thought it was. So guys, that's it for me. You know, look, really be careful out there. It's a risk off market, so you've got to be careful. I love the dollar at the moment. It seems to trade well. I'm a bit nervous on stocks. They seem to trade poorly, and everything else, trade it as you see it. That's it for me, Paul.
Cheers, Julian. Thank you very much. And certainly that COVID situation around the world does seem to be getting a little bit worse. A couple of cases in the Waikato overnight, New Zealand, Julian. That will not make this week any easier for us in the North Island at all. I wouldn't have thought. Thank you very much for your input as always, mate. More important stuff than COVID news there. And that iron ore price is stunning, isn't it? That is a heck of a fall, right? And yeah, you know, we will watch these markets with interest. I do think those, as you say, those wage numbers next month out of the US will drive it in one way or the other.